Thanks for joining, everybody. Today, we'll be talking about ordinals, which I see as Bitcoin's 0-to-1 transformation. And I'll explain a little bit more about what that means in the presentation. If you have any questions during it, feel free to comment them in the chat, and then we'll do a nice Q&A at the end as well. So what are ordinals? Ordinals is a new protocol for NFTs and also fungible tokens on BTC and other blockchains, but BTC is where they've gained most traction. They're, technically speaking, they're the latest implementation of a colored coin token system, so it's not something totally new. Colored coins were discussed back in 2013, and basically it assigns property to Satoshis on-chain. So kind of a layer that it's all happening on Bitcoin, but you're ascribing value kind of on the secondary layer through a protocol, which is called ordinals. And then inscriptions expand on this by letting you attach arbitrary data. So you could attach an image file, which could be an NFT, and that would be ascribed to individual Satoshis, which you own on the BTC blockchain or whichever network is implementing the ordinals protocol. And this is all made possible by kind of a hack in a recent upgrade to the BTC network called Taproot, which let people attach this arbitrary data, which formerly wouldn't have been possible. But now image files and things like that can be put into on-chain data. So here's an example of an ordinal that's out in the wild currently. So these are all sorts of different things. So each ordinal is numbered. So you'll see up here, inscription 6,210 is just these guys on vacation or whatever. They have put their picture onto the BTC blockchain. You also have collections of NFTs like this punk. But you can also do other interesting stuff like uploading code. So that code could be an image file or it could be executable code to play a game like tic-tac-toe. Or you can also put JSON data, which has been used in kind of a hacky way to create fungible tokens. So this on the right is the data for this ordi transfer. So why do ordinals matter? Is this just a new overpriced JPEG? Why are we doing a webinar about ordinals? We're excited about ordinals because they represent a 0-to-1 transformation in how people see Bitcoin. So for the vast majority of people in the blockchain space, attendees of this call kind of excluded since we've been doing interesting things on Bitcoin for a long time. But for the vast majority of the blockchain space, a few months ago, Bitcoin was just a store of value that you could buy and hold and send and receive. And that was kind of the end of the story. But with ordinals now, people have this nugget of an idea that, oh, Bitcoin can do interesting things. And what's so exciting about that is that most of the volume is happening on BTC. So this is most of the mind share in the blockchain space. So the number of people who have seen this, oh, you can do something else on Bitcoin, is much larger than it was prior to ordinals. The other interesting aspect of ordinals is that, especially on the BTC network, which is where most of the activity is happening, there's limitations inherent to that blockchain, which members of Unbounded Capital's webinar series will be well aware of. So kind of the combination of those limitations plus potential reactions, or some existing reactions, but potential moves made by the core developers in charge of BTC could push the growing community of developers and entrepreneurs who are excited about building apps, leveraging Bitcoin, towards chains which prioritize utility, scale, efficiency, and stability. And if you're familiar with Unbounded Capital, you know that we think the clear choice there is Bitcoin SV. So if you haven't read Peter Thiel's 0-to-1, highly encourage it. I picked it back up to kind of refresh my memory and prep for this webinar. But in it, he writes, doing what we already know how to do takes the world from 1 to n, adding more of something familiar. But every time we create something new, we go from 0 to 1. The action of creation is singular, as is the moment of creation. And the result is something fresh and strange. So I think this is a good example of something fresh and strange. It might not be the most exciting thing in the world, but it is definitely a 0-to-1 move where prior to this Clay, Pepe, there was nothing else on Bitcoin. It was just this kind of stagnant store of value, relatively boring thing. But now there's something interesting, which we can take from 1 to n. And this message is definitely propagated throughout the space. So if you Google ordinals, you'll see all sorts of articles. These are just a couple. But Forbes commenting on Ordinals on Bitcoin being the next big thing in crypto, which has definitely been the case over the last few months. And then an article from The Block yesterday, which is a more crypto-y publication. And they're excited about Ordinals, like a new protocol within Ordinals, unlocking things like 3D video game assets. So already you're kind of seeing this one-to-end transformation from the static JPEG to interesting things that have large existing markets like video game assets. The major Bitcoin forks, which emerged from the block size wars from 2017, kind of fragmented the community into two groups. One small group, which understood the potential for Bitcoin, so they already kind of had this 0-to-1 transformation, but that was a much smaller group. So the vast majority of the mind share in the blockchain space really just never considered this. Most people, including Peter Schiff, who's the subject of the screenshot, he prior to Ordinals didn't really see the point. And now he's relatively bullish on using Bitcoin to do interesting things. He himself released an Ordinal collection on BTC. He was at the London Blockchain Conference, which we attended a few weeks ago, and is already thinking about how to tokenize gold on Bitcoin through Ordinals. So the big block vision of what you can do on Bitcoin just has a much bigger audience now, thanks to the growth of Ordinals on BTC. So what about BSV? That's usually what you're learning about on our Unbounded Capital webinars. So BSV has an implementation of Ordinals. It's called one-sat Ordinals. And this is from yesterday. I'm sure this number is already higher, but there's already over 6.7 million inscriptions. And it has all the benefits that you've heard us talk about for BSV. Generally, much more efficient. There's more programmability. So doing things like 3D video game assets on BTC, which is now this new revelation, you could do kind of out of the box on day one with one-sat Ordinals. And it's more stable, which is very important. I'll touch on that more in a second. What's also interesting about Bitcoin SV is that BSV developers had a multi-year head start on using Bitcoin to do interesting things. So for years now, we've already had NFTs on BSV, fungible tokens, lots of micropayment business models. In fact, a lot of the activity on BTC Ordinals is actually from Bitcoin SV developer teams. So this number isn't accurate as of today. It was hard to get the data because Unisat, which was doing the vast majority of transactions, is no longer showing up on these public metric websites. But at times, over 99% of all BTC Ordinal activity was facilitated by BSV developer teams. So the Twetch team is working on Ordinals wallet in addition to Twetch. ReliX is working with OrdSwap, and Volt is now Unisat. So for these teams, BTC Ordinals really were kind of a move from one to N. They already had knowledge of exciting things you could do on Bitcoin through BSV. And once the window is there to execute that on BTC, they did so. And this was a great move from a business perspective, as there's a much larger market for NFT collectibles with more liquidity on BTC currently. But all these teams understand the benefits of BSV. So while they're having success on BTC, they're lacking the efficiency of BSV, which would make their businesses much more profitable. They lack the programmability and flexibility of the protocol. So, they can do some things on BTC, but they know they can do a lot more on BSV. And then stability, which is really key. On the topic of stability, the big question now, from my point of view, is whether or not BTC Core, the developer team in charge of the BTC protocol, is going to fix the bug of Ordinals. So prominent BTC Core developers have already indicated this is kind of the plan. So this email from Luke Jr., who's probably the most influential BTC Core developer, he says, action should have been taken months ago, referring to Ordinals. Spam filtration has been a standard part of Bitcoin Core since day one. And it's a mistake that existing filters weren't extended to taproot transactions, which again is how Ordinals are putting data on chain. So he suggests that this is a simple bug fix. Ordinals are a bug. So it doesn't even really need to wait for a major release. They can just push this unilaterally from the top and squash the Ordinals activity on BTC. This might seem like something that won't happen. Why would you kind of crush tens of millions of dollars of economic activity? But BTC culture is really oriented around routine network upgrades. So pushing something that makes a major change, like squashing ordinals, would be understood. And there's a history of deference to the BTC core developers. So historically, what they say has gone, and they've pushed many upgrades, quote unquote, in the past, which have squashed a lot of economic activity, including everything that the Unbounded Capital team is focused on in the Bitcoin SV ecosystem. So what does this all mean for Bitcoin? So I think from the highest level, Bitcoin being used beyond just the store of value, buy, hold, send, receive use case, that's great for the world. We've advocated for this vision for years, that Bitcoin is a really powerful tool that can do a lot more than just be a token that you buy and wait to go up in value. So this being understood now by the vast majority of the blockchain space, and even people who are kind of tangential to the blockchain space, like a Peter Schiff, that idea mainstreaming is a huge win for, we think, just the amount of value that can be created on the internet by leveraging blockchains. JPEGs and collectibles, like most of what you're seeing now, this is really just the beginning. So while it might seem silly, and I think a lot of people that have already had this 0 to 1 transformation on seeing the potential of Bitcoin, a lot of these people are kind of writing off what's happening, thinking it's just another silly JPEG craze. But this is just, the early stages of what can we do once we can put data on Bitcoin and understanding the potential of that. So while we're not creating a JPEG oriented fund at Unbounded Capital, we're really excited about what this could lead to and what the logical conclusion of using Bitcoin in these interesting ways is. And then thirdly, I think the potential interference from BTC Core, like what you saw with Luke Jr.'s email, plus BSV's head start on making it possible and really simple to build scalable Bitcoin businesses, paints a path towards a transition of this economic activity from BTC towards BSV possible. From a base level, it's much easier to build a business like this on Bitcoin SV. Efficiency, scalability, programmability. But I think maybe the most core and most unsung aspect of Bitcoin SV is the stability. So not having this developer group that you have no relationship with ending your business arbitrarily through an upgrade to the protocol, which you depend on to make your business possible. And then also the high concentration of Bitcoin SV knowledge from teams that are currently benefiting from the BTC Ordinals craze and creating businesses around it, I think makes this transition to BSV much more likely than it otherwise would be. Since these teams know, what is possible on Bitcoin SV, and they already have communities and users and products that function on BTC, a transition towards BSV, I think is in the works. And from talking to people that are in the space, I think it largely depends on what path the BTC developers take. So if we see kind of a heavy-handed spam filtering like Luke Jr. has advocated for, I think the likelihood of that happening goes up quite a bit. For more on that topic, we can talk about it, of course, in the Q&A, but Zach and Joshua wrote a blog with us kind of weighing the different possible outcomes that we see for what happens with a lot of the activity currently happening on Ordinals. So that's it from me. Wanted to keep the webinar relatively brief. There's a lot more to say on Ordinals, so any questions that you have on Ordinals, things from the presentation, or other kind of related topics, Zach, myself, and Joshua are happy to answer questions now.
Yeah, thanks, Dave. So yeah, I think for anyone that wants to dive in, deeper after the fact and really think about what this means for the Bitcoin world as a whole, definitely encourage folks to check out the article Joshua and I wrote that we just linked into in the chat. Joshua just turned his camera on. I know you've been on a couple of these webinars, I think, before, but as kind of the most senior technical member of Unbounded Capital's investment committee, anything else more you want to just share with the participants now in terms of kind of the significance of Ordinals as you see it?
Yeah, for sure. First, great. That was a great presentation, Dave. I think it really highlighted kind of what's been happening with this stuff. Some color I wanted to add was that Bitcoin had the ability to do all this stuff from the beginning. The core devs actually explicitly blocked this type of activity with being able to embed data into the chain. So that's why the Taproot hack that Dave pointed out is kind of like a new, like it's a kind of a gut punch to the entire space, because for at least 8-9 years, the entire crypto space assumed that this stuff wasn't possible on Bitcoin, in this case, BTC. Therefore, that's why you have thousands of altcoins, right? Ethereum primarily, which has been number 2 in terms of market cap and developer activity. I mean, probably number 1 in dev activity for the longest. But now that BTC can do these things, from my position, we have to reevaluate everything, because our assumption has been broken. Our core assumption about what Bitcoin could do has been broken. So I look at it as, like Dave pointed out, 0 to 1. Yeah, I believe it's a massive change, and a lot of businesses and business models with crypto need to be reevaluated.
Okay, well, so Joshua, we wrote this piece together. We've talked about it a lot in person, over the phone, over these last couple of weeks. Talk about how the most likely way you see this all playing out is.
Yeah. So I believe that where BTC has made massive modifications to the protocol, such that they caused the original fork of BCH back in August 2017, which was a huge event in the crypto space at the time. And the exchanges had a lot to deal with because they had to support 2 chains, and it was just a big mess. My belief is the reason BTC was able to pull something off like that, basically scave off big block Bitcoin, was because the miners were threatened by the coin price. So they largely earned their revenue via the coin subsidy, which back then was 12 coins. Today it's 6.25. And the BTC price was increasing at that time. I think it was around 7,000. It went up to 20K later that year. So the miners are thinking, oh, well, if I don't do what these devs want and what the community wants, I might threaten this primary source of income. Well, with this ordinal stuff, and this is what Satoshi, the creator, said, is that the fees from transactions have to replace the subsidy. So one day, I believe it was last month, the fees exceeded the subsidy due to BTC's high fees and the volume. Granted, it was low, but they have this weird fee market where people bid against each other. So in the end, they were making double from mining a block than they were. They were earning 6 coins from the subsidy, as well as 6 from the transaction fees. And that was happening for the greater part of a day. So this time, the miners, who are huge companies at this point, much bigger than they were in 2017, much larger hash rate, much larger data centers, I don't think are going to simply tolerate developers telling them, hey, you got to kill this stuff, when they're basically saying, no, they're going to the miner and saying, hey, we need you to reduce your income because we think this is bad. But they're sitting here thinking, oh, well, I'm making all this money. How is that bad? Right? So what I think is going to happen, and this is a very controversial opinion, I think they will increase the block size because the economics dictate that. And that's kind of what we've been saying in BSV for so long. And that's why we've done it. So
specifically, you're saying the popular version of Bitcoin that most people know, BTC, will raise its block size for the first time in 6+ years.
I think that's the more logical outcome because of the core difference with the miners actually earning money from this stuff versus being scared of doing it at the risk of losing money before.
Yeah, and just to gives people kind of a history lesson here. So this block size war that happened in 2017, there was no clear winner in advance of that. It's not like the small block community came in with a huge advantage. From my understanding, was actually like a small majority of miners that, not huge majority, but a majority of miners that supported bigger blocks, but that those that were in kind of the smaller block camp, because the way they kind of hijacked Bitcoin, they didn't actually do it via a hard fork. They did it via a soft fork. So if you look at the block size war, what you see is not actually the miners deciding this is the new way, but a majority of those that were running nodes. And if you look at who runs a node that's not a miner, it's pretty much people that care about this kind of decentralized above all else vision for Bitcoin. Because at least in the kind of the original vision of Bitcoin and in the Unbounded Capital vision for what Bitcoin at scale looks like, there's no real need for individuals to run nodes. So it's really kind of like a virtue signaling thing around, kind of anarchism and libertarianism. So given that those are the types of people that are running nodes, they were able to have a strong majority of nodes change the software, and then kind of from that, get the kind of exchange and miner support to keep that BTC ticker. But a number of people, like famously the CEO of Coinbase was very much we need to keep raising the block size and keep growing Bitcoin camp. And then most of these folks realized there was a lot more money to be made, at least in the short term, from kind of not sharing those opinions anymore. So they stopped doing it. But, it was far from a closed door of the block size just continuing to be raised back when it happened. But history happened the way it did. And now here we are now. It's definitely a much tougher thing now than it was then, I think, to raise the block size. So while I understand why Joshua has the opinion he does, and I think it's a lot more likely than people think. I don't think it's as likely as Joshua thinks. But if you ask the average kind of crypto person, or for anyone here on the call that's invested in any other crypto managers, they would probably tell you the chance of this is near zero. So yeah, Dave, you want to add something?
Yeah, I just wanted to add, I think it's important to understand the block size increasing or staying the same was one aspect of that fork. And then all sorts of other changes were made subsequently. So like most recently you have Taproot, but there's just like a culture in BTC and other blockchains that are doing ordinals things like Dogecoin. There's a culture of improvements and upgrades. So there's just not the stable foundation to build a business. So even if you get, you increase the block size on BTC, okay, great. You kind of improved the efficiency aspect. You still have this programmability and stability aspect, which would be an open question. So programmability wouldn't really be improved with a bigger block on BTC. So if someone who's currently making a bunch of money on BTC ordinals, but they have this great idea, maybe they want to do something with 3D game assets, but it's just not practical because they need some opcode or something that was removed. So the flexibility of being able to do more interesting entrepreneurship on a chain like BSV, which has restored all this, would still be a factor there. And then just the reality of this is, okay, great, we got bigger blocks. Now my transaction fees have decreased, but what about when it fills up again? What about in 2 months? Or what about when there's a new great idea from some developer that doesn't really run a business, but gets paid a lot of money to write code? And then that inadvertently screws my business, even if it's not a hostile act. So I think recognizing the importance of all three of those pillars, the stability, the programmability, and the efficiency, is important for kind of mapping out how you think people who are making money on BTC ordinals currently, but see the much bigger picture of, the kind of value they can generate with really a platform like what Bitcoin SV has. So there's a lot of squeamishness around BSV for kind of political reasons or reasons that are not really relevant to like the core product. So maybe they try to recreate that, but that's, I think, a very big challenge.
So Dave, you want to tell us about how some of our portfolio companies are leveraging ordinals? I think that might be of interest to some of the participants here. And again, as always, this is interactive. This is a bit more of kind of the in the weeds technical discussion than maybe we're used to having here, but it's one that's really important. I think it's hard to overstate that. I mean, literally, there's nothing ever being built on Bitcoin until a number of months ago. And now there's tons of stuff, tens of millions of dollars worth of these NFTs trading every day, with basically everyone running it being BSV, developers and entrepreneurs. So it's all happening fast. And, we think there's likely to be very meaningful effects in the near term for not just our portfolio companies, but for the crypto and blockchain space as a whole.
And there is cool stuff too. I'm trying to remember where I found it. Okay, it's here. You can go to ord.io and there's games which execute the code's all on the BTC blockchain, and you can play the game in your browser. So there already is like a cool growth of things, from JPEGs to games and things that are actually products, I think with more legs in the long run. But on the topic of our portfolio companies, I might actually kick to Joshua to kind of flesh this out, because he's kind of been boots on the ground with that. But Handcash definitely has taken advantage of this. They've rolled out ordinals, they call them Handcash items, which are accessible and tradable through the Handcash wallet. That's as of this week. And there's been a lot of buzz around a trading card game, which has leveraged Handcash. They did a big airdrop earlier this week, and it's been very exciting. but Joshua may have kind of more details on what's going on there.
Yeah, so there's a trading card game that's going to launch. Actually, Handcash poached them. They were about to launch on BTC, but because of the cost prohibitiveness, Handcash actually pulled them over and got them to bootstrap using their wallet, and then did an airdrop, community airdrop, and that's been kind of injecting a lot of energy into the BSV space. So people have been trading them. Because it's open protocol, they've been, doing OTC deals as well as, trading them on the on chain directly with BSV and script. So that's been really exciting to see. And it's, even though BSV is technically second in this regard, as Dave mentioned, we've been doing a lot of this stuff for years now. So he mentioned the games. I'm pretty sure someone probably did that on BSV 4 years ago. And then now they do it on BTC and act like it's some new thing, which, is a little frustrating, but it's also kind of funny. So, I think the more, if the portfolio companies and the rest of the community rally around this singular protocol, then with the unbounded block size, as well as, the speed and, because we haven't modified the Bitcoin protocol as much, it's more of what Satoshi had. We're going to be able to move a lot faster than some of these other chains. And, they've already run into issues with transaction volume that BSV decided to, we'll work on this for a while. And then, so that once the activity comes, we can actually handle it.
Joshua, can you talk a little bit about because you understand this better than I do, some of the interesting things you can do from other opcodes, which are enabled on BSV, which aren't on BTC, which add, in kind of like an end user point of view, add functionality that would be a huge deal if it were rolled out in BTC tomorrow because of how many eyeballs there are, but just isn't possible.
Yeah. So one way, the way BTC exchanges have been doing trading on chain is through this concept called partially signed Bitcoin transactions. So they basically build a transaction halfway through that says, I will fork over my ordinal asset to someone as long as they pay me X Bitcoin. But these things are off chain. They're generated on people's servers, right? So each exchange, each domain has its own order book. It's kind of like a centralized exchange. But with BSV in script, we can do the same thing except on chain. So you can lock your asset into a script that says the only way to unlock this is if someone pays an output of X Bitcoin. So I can say, I have my frog JPEG. I'll only give it over if someone actually pays me on chain 10 BSV. That's the only way they can unlock that script. So what's happening is you have multiple domains that show the same order book. So you have this, quote unquote, decentralized order book, which with BTC, that's the user experience they're going after, because you can take your wallets, which are interoperable, go to these different domains and list. But it kind of sucks, right? Because if a new a new exchange pops up, then you got to go to that exchange, and somehow a lot of people are going there, and then you got to relist, and it's bad. What if you're sleeping, right? I mean, this stuff moves so fast that you might, with the unseen principle, lose money because you weren't just awake when you could go list it. Whereas with the global order book, once you list it, it's going to propagate to all the marketplaces that implement it. So we already have 3 of these markets on BSV that show the exact same order book, and they just compete on UX and liquidity at that point. Who gives the best user experience and who takes the lowest fees.
Yeah, that sounds very similar to those familiar with our Spotify use case example of a vision of the future of the internet with selling music, where musicians sell directly to end users, and then there's competition on the interface to serve that music or recommend new songs. So, in this world, Spotify doesn't own the music, or Apple doesn't own the music. They just serve it to you, but it's a peer-to-peer transaction between artist or rights holder and end user. Sorry, Zach, go for it.
Yeah, I was going to say, Dave, tell us more about how Handcash is using Ordinals.
Yeah, so really what Joshua said so far. So they have in their wallet, there's an item section now. So you can send, receive Ordinals. I don't think there's a minting interface through Handcash. Joshua, correct me if that's wrong. But in the same way that, Josh was describing, where Handcash is an interface to really what's on chain behind it. So Ordinals, which adhere to the one-side ordinal protocol, are visible in Handcash, and you can send and receive through their UX. So it's, this vision of competing on the user interface and any add-ons, but really the underlying digital items being owned by users, and they can use them kind of however they want through whichever interface they want.
Dave or Joshua, any other things y'all would like to add here?
Well, I think one reason it's taken off so organically is also a point Dave made about the 0 to 1. So I think some people, and even within the BTC community, sadly, have pointed out that they are indeed just JPEGs and this is spam or whatever. But the reality is, even with BTC fees, the barrier to create something like this is so low that I think it's too premature and naive to just, dismiss it as spam. So I look at it as, well, now anyone can go 0 to 1 with anything that anyone could think of. So, and I think that's why it's taken off, is because you've had this wave of creativity. And, unfortunately, BTC has and will continue to hit walls unless they do solve their scalability problems. And this is kind of why we think this will bleed over to BSVs, because you want everybody to be able to create for as little as possible. And then, who knows what'll happen after that. So that's kind of the way I look at it. That's why I'm so positive about this innovation. And I think it's not going to stop. I think we haven't seen anything yet.
Yeah, I would echo that. I think the really fascinating wrinkle, which, if I was like writing a fiction version of how Bitcoin plays out, I wouldn't have even included. But the fact that BSV development teams are dominating the BTC space in this way is just really interesting from a game theory point of view. I think even absent that, there's a very good chance, I don't know what percentage that is, but there's a very good chance that this moves over to BSV just because that's the economic incentive. If you're being priced out of your collection or your experimentation on BTC, do it somewhere that's cheaper, do it somewhere where you can do more interesting things, or do it somewhere that's more stable. So the push in that direction already makes a lot of sense. But the fact that these teams explicitly know they have existing businesses which still operate using Bitcoin SV, and they know the full story, and they're just kind of embedded in this Trojan horse style in BTC, creates a really, really fascinating dynamic. So I'm watching really closely to see what BTC does. I think I wouldn't put it past them to just kind of ham-fistedly squash this and not have a lot of appreciation for the repercussions of that. So we'll see what happens. But yeah, just from a kind of game theory, the novel of the story perspective, it's a very interesting story to watch. And I would encourage everyone to take a look and follow along as these things play out in real time.
Clark, we got a question from you here.
Yeah. Hey guys, thank you very much for the webinar. This is really informative and just incredibly interesting to listen to. And I do have one question. I was wondering, and I'm sorry if this is very poorly worded, but if ordinals do become generally accepted and not treated as a bug that needs to be fixed, how would you expect or think that this might affect the perceived utility of other chains, such as like Polygon, that are popular for NFTs and digital artifacts?
I'll let Joshua go on a rant because I know he has one ready to go here. But I would say from a high level, it just the kind of premise of all those other blockchains is, oh, Bitcoin's cool, but you can't do what I want to do. So let's build a new blockchain. And there's a big incentive to do that because often, I can make a token and sell that. And, so the incentive was, even if you knew that Bitcoin could do that stuff, there was still a huge incentive to pretend that it couldn't and then build a new blockchain. But I think most in the space just didn't know that you could do that on Bitcoin. So yeah, I think I'll let Joshua kind of round out the answer, but I do think it really obsoletes a lot of the, what's the value prop if I can just do it on Bitcoin?
Yeah, I agree with that. I think that, like I mentioned earlier, that this core assumption was broken. So that's why a lot of these chains exist. So I think, I'm not saying these chains are going to die, but I think a lot of the money and investment, or even new people, will now look at Bitcoin instead, say, oh, I can do it here. And it's never been lost that number one spot. And that's without being able to do anything. So now if it can, I foresee it sucking almost all the liquidity away from other altcoins, especially the really, as you know, coming down with the SEC stuff recently. I think that's just even more pressure to suck it back in to Bitcoin.
All right, thank you.
Yeah, I do think it's a perfect storm with the distrust of central exchanges currently, where, oh, okay, well, this other thing, especially what Joshua was talking about with BSV, where you have this global order book that different companies serve as interfaces to, that gets a lot more attractive when the people that seemed untouchable, like Binance or, you know, FTX now is kind of old news, but right before it exploded, it was seen as like cream of the crop. So seeing these big companies falter, I think, makes that much, much more attractive. This is a bit of a callback to a former point that you were making, Joshua, but I do think one interesting aspect of if BTC forks, where do the miners go? So you emphasize these are big companies, they're making a lot of money now, especially with the fees from BTC. So they're incentivized to follow that path. Another point in your camp is that a lot of these companies are publicly traded. So it's not even, you know, I want to do the profitable thing, but they have a fiduciary duty and they have liability if they just, for ideological reasons, stuck with my friend Jameson Lopp and I'm going to do what he wants to do. It's like, maybe that works in 2017 when these are mostly privately owned companies, but in 2023, when you're publicly traded, that's a little bit of a different story. David, I see you got a question. I'll unmute you.
Am I unmuted now?
Yep.
Okay. Driving, so hope that this comes through. I'll ask sort of the kind of global questions I tend to ask in these interesting discussions. So we've come a long way since 2008, 2010 with Satoshi and up and down and Ethereum and proof of work, proof of stake, and on and on. I guess the question I have for those who have their fingers on the pulse of everything is where you think, beyond the smart people having this kind of discussion, the general attitude is out there at the government level, at the sort of big player investment level, you know, money center banks and hedge funds. And, you know, just in the last 6 months, the new thing is GPT, LLM, and everything related to that, you know, and everything's piling on there. Sequoia and other firms killing their own companies that they think are going to be vulnerable. So, you know, the wave of interest in different investment opportunities and what's going to change everything is exactly that. Waves that come and then some stay and some flood everything out. So my question is, in that context, where do you think blockchain, which is of course different than digital coins, and, you know, or digital transformation of fintech, however you want to approach this, I'm just wondering where you think the broader psychology is for where we are in these change paradigms.
Yeah. Here's where my mind went when you're asking that question. Famously, there's been a ton of pivoting from Web3 blockchain to AI. And part of that is just, it's like the new flavor. So there's always pivoting to the new flavor. But I think what's motivating a lot of that is the value prop of AI is very clear. You have an idea for an image, you type it in text, and then like, boom, magically there's that image. So I think there's been this huge sigh of relief for entrepreneurs and investors that the AI pitch just really resonates with an average person. It's a very clear value prop. Look at everything we're going to automate. It's going to be way more efficient. Web3 never really had that. So like people who have been in Web3 for like 4 years, you'll ask them to define Web3 and they like won't even really be able to do it, right? So like, what is Web3? AI, clear. Web3, kind of unclear. So I do think that kind of dovetails nicely with the ordinals phenomenon, because now, and maybe not yet, because now it's looking at JPEG. So people are like, well, why do I want to pay 50 grand per JPEG? But like the next phase. So the 0 to 1, we're at 1. That's not so compelling, but N is very compelling. And N can be all sorts of things. You know, we're Unbounded Capital. We see this unbounded future for value creation, leveraging blockchain. We're talking about all the ends that we think are coming. So as you kind of move past this like immature JPEG collection phase, which is necessary, towards the more interesting stuff. And now the Web3 pitch isn't just like this loose assortment of buzzwords, but it's very clear value prop. Maybe it's like what Josh was talking about with this order book that is shared. That's a very clear value prop. I think you explain that to people, they get that, they see the benefit of, you know, not going to Ticketmaster and StubHub and all these different places, but they just search for an event and like there's all the tickets wherever they go. Something like that, just off the top of my head, I think is very clear. So I do think we'll see some of the repivot back to Web3 once Web3 becomes just clear what that means and where the value is. If that answers your question.
Yeah, thanks for that, Dave. And David, thanks for the high level question as always. Sometimes we can get a bit into the weeds on things, and it's always good to balance that. I think that, you know, Dave's perspective on kind of how we see things from the entrepreneurial perspective was pretty well represented in what he shared. In terms of the general kind of large investor government, when I say large investor, you know, not Unbounded Capital, you know, talking about the folks that are deploying many hundreds of millions or billions of dollars into these companies, unless they're specifically blockchain oriented funds, there's very little interest in kind of blockchain and Web3, relatively speaking, right now. And even most of the big blockchain and crypto funds, despite what they might say, their pace of doing deals has slowed down to either a complete halt or to near a halt. So I think in general, like, I don't want to kind of sugarcoat the broader blockchain crypto ecosystem. It's quite bleak out there. You know, we see the SEC, you know, taking these actions against Binance and Coinbase the biggest in the United States, Binance the biggest in the world. At Unbounded, we think that this is kind of just the beginning of those legal actions. Ultimately, we think this is good for blockchain's development and blockchain's usage long term, but certainly for the kind of near-term foreseeable future, most of this sector is not looking great. We, of course, think that there's a very small subset of that looks very attractive, and this, you know, macro and regulatory setup allows us to invest at just stupidly low valuations into incredible companies. So we like that, but overall, I'd say that that's kind of the attitude of those that are in government.
I got to get into a board Zoom. So yeah, no, I think you're spot on and very honest, and not just honest, transparent in what's really going on out there. And I really appreciate the opportunities I have to come onto these calls and educate myself. So thank you very much, and we'll follow up directly. Thank you, everyone. Appreciate it. Take care.
Thanks, David. Yeah, I would add to what Zach said with, I think the way that Unbounded Capital has approached investing in the blockchain space is that the blockchain has never been the product, right? So it's, I have a business, here's my value proposition. Oh yeah, we're leveraging blockchain to deliver this value to our end users, but it's not like invest in my blockchain. So I think that will be part of the path out of the like hesitance from capital to allocate to blockchains, is that just the shift, because you know we've kind of been alone in having that approach. So the shift from the A16Zs of the world to not investing where blockchain is the product, but investing in real businesses with real business models that generate real value and they leverage blockchain. And you know that could be kind of something that's leveraging ordinals or micropayments or any of the stuff that we've talked about at Unbounded Capital for the last several years.
Yeah, I think it's always good to end on a high level. So thank you so much, everyone, for joining today. If you want to learn more, I encourage you to check out the piece. And you know, as always, feel free to get in touch with me or my partners directly. We look forward to hosting you and you know, hopefully some more folks in a couple weeks. Tuesday, I believe it's June 27th. Thank you so much, everyone, and have a great day.